Welcome to Illuminati Silver. We tell you the truth about silver. Today is Saturday the 6th of March 2021 and we're publishing our gold and silver weekly update for the week ending the 5th of March. We also briefly look at political events and economic reports which could shape what happens to the US dollar and therefore precious metal prices. So let's take a look. Now, just a quick shout out to three quite important videos we produced in the past few days. The first, silver crashes, but how low will it go this week? Second, if the Fed follows the European Central Bank, will it be good news for gold and silver prices? And third, gold hits 8-month low as equities fall too. And we've placed links to both of these below. Now, back to last week's figures. Gold fell $33 last week, from $1,734 to $1,701, having hit a high of $1,760 and a low of $1,687, a fall of almost 2%. This follows a fall of $50 the previous week and $40 the week before that. In sterling terms, gold finished the week at £1,230. That's down £15 or 1.2%. And in euros, it closed at €1,428. That's down €9 or 0.6%. Silver fell $1.45, falling from $26.69 to $25.24, having hit a high of $27.09 and a low of $24.86, a fall of 5.4%. In sterling terms, silver closed at £18.25. That's down 91 pence, which is almost a pound for those not familiar with the currency. And in euros, it closed at 21.20 euros. That's down 0.91 euros, nearly a euro. The gold to silver ratio rose from 65 to 1 to 67.3 to 1. Bitcoin rose just over $1,000 last week and its price currently stands at $48,092. The Dow Jones closed on Friday at 31,496, up 572 points on the day and up 564 points on the week. So had it not been for yesterday's rise, there would have been little change. The S&P 500 closed at 3,841, up 73 points on the day and up 30 points on the week. And the Nasdaq Composite closed at 12,920, up 196 points on the day, but down 272 points on the week. The Nasdaq took quite a beating in the earlier part of the week, which we covered in our daily videos. Brent crude closed at $69.36, up a considerable $4.94, and WTI crude closed at $66.09, up $4.59 on the week. As we suggested in an earlier video, the prices are being deliberately controlled to get them up to, and if possible, beyond $70 a barrel. A rate we ourselves forecast would be harmful to the global economy, preferring to see prices between 50 and 60, in the full knowledge that the likes of Saudi Arabia have the ability, not necessarily will do it, but have the ability to extract this commodity at less than $10 a barrel and could easily slash those prices in half and still make a considerable profit, though admittedly the American fracking industry would suffer if that were to occur. The dollar index stands at 91.97. That's up 1.1 on the week. Now, our price trading range announced last week stated the following, quote, "Therefore we see gold still under pressure and now trading between $1,700 and $1,850, with $1,650 and $1,900 as outliers. Silver has potential in either direction this week, so our range is marginally wider than usual, between $26 to $28.50, with $25 to $29 as outliers. Well, gold did open up initially, and then quite promptly continued its descent, with no real attempt for a rally after Tuesday, though it did recover slightly on Friday. It traded within our normal range on the upside and our outlier range on the downside, with a margin of $73 between highs and lows. What was interesting last week was the non-farm payroll report on Friday, coming in stronger than many expected, especially after Wednesday's disappointing ADP report and Thursday's disappointing weekly jobless claims figures. According to the US Labor Department, employers added 379,000 new jobs in February. This was the largest increase at the fastest pace since October. The new jobs created brought the unemployment rate down to 6.2% from 6.3% in January. More so, the jobs report came in well above estimates, which predicted that only 182,000 jobs would be created last month. This certainly appears to reinforce the view that the US economy is on the road to recovery, especially in the manufacturing area, where the PMIs were higher for February than January, and services PMIs were mixed. One was up, one was down. Factory orders for January were higher than expected and showed an increase of 2.6% compared with 1.6% in December. It's envisaged that February's figures will be higher again. We're cautiously optimistic about the economic situation, especially as more people are vaccinated and businesses begin to open up again, though we're not ignoring the prospect of additional flare-ups and new strains of COVID becoming apparent and revealing themselves. Also yesterday, we highlighted that the European Central Bank are suggesting that they may embark on a path of increasing bond buying in order to keep yields down. And one has to ask, will the Fed follow suit if that does happen? Or, with a more robust economy, perhaps they may not need to, and in fact, arguably, could cut back its support earlier than originally envisaged. Though, frankly, one would suspect this will still be some time away. What was impressive about gold was that it did manage to hold the $1,700 line and close just above it, in spite of an increasing dollar value due to Treasury yields surging yet again. Resistance, from a technical point of view, is seen near the 10-day moving average of $1,749, though we would call $1,750, as it's a psychologically important figure, and target support, as mentioned last week, is seen at June lows of $1,670. The MACD is pointing to lower prices, while the fast stochastic is suggesting the opposite. Silver, like gold, opened up at the start of the week, attempted a serious rally on Tuesday, and then descended and almost fell off a cliff on Thursday, reaching its week's low momentarily on Friday, but recovered from those depths, but still showing a significant loss for the week. Margins between high and low was $2.23. Really as we suspected, which is why we expanded our trading range prediction, with our low outlier being marginally breached, but recovered slightly above that figure in the end. Silver prices technically are witnessing support at the $25 level, with stronger support at the 200-day EMA of $24. $26 now becomes an important target should we expect to see silver rise again towards $28 in the foreseeable future. But much is now dependent short-term on the value of the US dollar and whether it can maintain its recent strength. And with limited data being published next week, which we'll go on to in a few moments, it's the dollar value that most eyes will be on and focused at, plus any announcements, if there are any, made from central banks, businesses, or politicians. Now, we've already mentioned relatively positive economic news published last week. Let's take a look at what we're expecting this coming week. On Monday, we have the wholesale inventories for January. Tuesday, NFIB Small Business Index for Feb. Wednesday, Consumer Price Index, Core CPI and the federal budget, all for February. Thursday, weekly jobless claims report and job openings for January. And on Friday, the Producer Price Index final demand for February and the UMich Consumer Sentiment Index for March. So really, quite a light week for economic data, with perhaps Wednesday and Thursday requiring most attention. So where does this leave us for gold and silver prices next week? Well, the Biden $1.9 trillion stimulus plan still has to be finalized, with the Republicans stating the plan is unnecessarily large and stuffed with Democratic priorities unrelated to the pandemic, while the Democrats maintain the US must act big and that the extra cash is being spent on those most affected by the crisis, the poor, minorities and women. It's very likely that the bill in some format will pass, but purely the vote will be on a bipartisan vote, we're almost certain of that, possibly then requiring the vote of the Vice President to make the ultimate decision. But we'll have to wait and see. So, our price predictions for this week allows for the fact that there does seem to be some continuing downtrend in gold prices, though in fairness the dollar will not go on strengthening forever, and if the budget is passed, investors may go back into equities, at least in the short term. Therefore, we see gold still under pressure and now trading between $1,600 and $1,800, with $1,550 and $1,800 as being outliers. We don't see gold breaching the $1,800 mark this coming week. Silver is likely to trade between $2,450 and $2,650, with $24 to $27 as outliers. Now tomorrow we shall be publishing episode 14 of Bitcoin versus Gold and Silver, and once again this market truly is quite exciting. And some are asking, was the $58,000 peak for 2021 the highest it's going to go, or will it have much further to rise? What do you think generally? Where do you see gold and silver prices going this coming week? Are you broadly in agreement with us? It's a reasonable spread that we have this week, simply because we are expecting a few fluctuations, simply because of the falls that gold and silver experienced this past week. Do share your thoughts. It'll be most interesting to hear them. And if you haven't done so, please subscribe to our channel. And finally, as always, have a safe, enjoyable weekend and a prosperous week ahead. We hope you have found this video interesting and informative, and if so, please give it a thumbs up and share it on social media. Please ensure that you have subscribed to our channel and press the bell sign so that you are notified of any future videos. Also, kindly visit our website at illuminatisilver.com, and if you haven't already done so, please subscribe either as a free or paying member for regular email updates and offers. Disclaimer. Illuminati Silver owners come from a background of banking, international wealth management and economics. Having now retired from these worlds, we are not qualified to give investment advice. Therefore, this and other productions must not be deemed to be giving such advice and merely represent the personal views of its owners.